All right, my lovely friends, do you know what today is? Yeah, today is Monday, July 22nd, 2019. Just happens to be my birthday. I wake up this morning and I'm just an explosion of happy birthday wishes, and I want to thank all of you for those lovely wishes. With that said, it's time to get back to work, so let's do that. As I am doing this video blog, trading has been going on for just about a half of an hour, and it's been volatile. Stocks have been up and down already all over the place. No surprise to you. This is how it's going to go. I explained this yesterday in my Markets A Look Ahead segment. Let's look at a couple of other aspects of this market so we can kind of gauge what's happening. This is the bond market from the 2-year all the way out to the 30. As you can tell, they're all coming down. Now, I've explained to you that no matter what the Federal Reserve is going to attempt to do with regard to the federal funds rate, they're going to cut rates. They are going to cut rates at the end of this month. In an attempt to normalize that yield curve, they can't stop the long end of the curve from dropping. And this is the dilemma that they are going to face here at one point, because we're going to see, again, despite what they're going to do to the short end of the curve, that's all they can do. You have to understand that. When the Federal Reserve is talking about lowering rates, what are they talking about? They're really only speaking of the federal funds rate. Now, because we have an inverted curve, and this is sending a very ominous signal to the market, their attempt is to ease the market's worry. Say, hey, don't worry, we got your back. We're going to cut that federal funds rate. That's going to open the doorway for cash to flow into the stock market. But again, the longer end of the curve is going to continue to drop. I mean, it's going to, of course, waver, but the trajectory is going to be lower. And that is going to send a very bad signal to the market as this moves forward. But for now, it's party time. It really is. Let's talk more about that. The dollar right now is about flat. Metals are up right now. Who knows what they'll do by the end of the day. Again, there's no price discovery mechanism right there. It's all fake. It's rigged. It's an incredible situation when a hard asset derives value from a derivative. Whoever came up with that scheme, well, it had to be a banker, right? Cryptocurrency is under a tiny bit of pressure, nothing major. But the action right now, I think, is in the debt market, like I just showed you. You've got the longer end of the curve coming down, anticipating what's going to happen here with regard to the Federal Reserve cutting rates. It's unbelievable. It's truly an environment that we've never seen before. And none of the models work. I mean, that's what we're not hearing. The Federal Reserve, they keep talking about the dot plot or the this plot or the whatever the hell they want to talk about. They don't have any models for where we are. And let me say this as well. There is not one single perfect model on this earth. Even when it comes to trading, I mean, everything has an element of uncertainty in it. That's where this becomes an art form. It's the truth. So, but they try to convince people that, oh, we got it under control, and that's what it's all about. They want to. It's the illusion that they know what they're doing. They have no idea what they're doing except one thing: they understand they're fleecing the middle class. And again, this is every single world leader and their central banks for the most part. This is what they're doing, and it's causing the middle class to suffer. No one opens their mouth. Our president won't explain to you how keeping rates low is helping the middle class, how keeping the dollar weak is helping the middle class. No. It only matters about what the stock market's doing. That's it. Corporate America rules. The rest of us, we don't matter at all, at least in this environment. Anyway, so that's pretty much where we are. Pay attention to that bond market. Watch where cash is at least trying to move, and we know where it's going to go. It's just so simple. Right now, for now, stocks are going to continue higher. I can't stress this enough. I've been saying this since it feels like time immemorial. There's no top anywhere right now. More easy money is coming down the pike here like you have no idea. This rate cut that's coming at the end of this month is the beginning of a series of cuts by the Federal Reserve. And not just that, we're going to see an all-out assault on the dollar to weaken the dollar. Again, how is that going to make the lives of the middle class better? Well, that's a question that the president should be answering. Don't you agree? With that said, I'll see you at the end of the day.